Good morning, good afternoon, good evening, whichever part of the world that you are in, and welcome to the foreign exchange or forex market review being done on Saturday, 4th March 2023 at 12:30 p.m. Indian Standard Time. And this is being done by myself, Dr. Musa. You have the contact information on the screen on how you can get in touch with me for any collaborations, inputs, feedback, ideas, etc. So with that said, let's jump into the Forex review and some really interesting and some very surprising and some very expected, I would say, moves that have happened in the foreign exchange markets that we have referred to in our previous market reviews, Forex market reviews. And in case anybody took steps to look at that, you definitely were making money on some foreign exchange setups that we had referred to. Well, let's very quickly jump in as usual with the US dollar index, the big daddy currency of the world that drives rest of the world. And uh, uh, that's really been not doing much of late. We've had, this is the monthly chart that you're seeing. We've had a rally up from literally about 100 levels to 105 levels. And during that rally, as we already mentioned in the previous Forex reviews, the links are available in the comment section below, sorry, in the description below. Uh, the rest of the global currencies did approximately depreciate uh, as per the dollar's appreciation. The DXY itself has really not done much since it's now basically gone sideways. We're focusing on the daily chart now. And as you can see, it's been pretty range bound for the last about week or so between 104.5 on the lower end and 105.3 on the higher end. So really nothing substantial as far as the dollar strength is concerned. However, it is very much in line with what the rest of the world, sorry, with the technically speaking, the long-term, oops, there we go. The long-term moving averages and technically just, sitting there, not really doing much until the DXY moves either. One level to watch out for is 104 on the lower end, and the other level is 105.5 on the higher end. The global forex markets generally will be very much range bound. Definitely applies to the euro, JPY, etc. I'm not. There is nothing of any global significance right now in terms of any major global event that is going to make the uh, currencies move one way or the other, right? All right. Uh, Sorry, just putting some levels as I was talking, just observing some levels to watch out for in the coming days. All right. So therefore, looking at the global pairs, USD Euro now, as you can see, very much same, almost a mirror image of the DXY. So again, nothing much to say there. More or less at parity at 0.93 to 0.95 on the US dollar euro rate, right? Depending on which way the DXY moves, we'll see a further move on this. Uh, Technically speaking, I'll come to that. The British pound, right, stuck between a range, definitely having a different pattern than what you saw on the DXY and on the euro chart. This is mostly, of course, regional or domestic politics in economics of UK at play. There is the Northern Ireland Protocol, which the European Union and Rishi Sunak claimed they have clinched a deal on, something we mentioned in our previous IMR, and it just got announced a few hours after we posted our IMR. Obviously, just a coincidence. We did not have any insight into that. Just uh, rational views on trends that were happening and underway in the markets. And if one pays attention to that, then one can fairly well have a sense of what is likely to happen. Only question is usually of the timing itself. Well, the Northern Ireland Protocol yet to be passed, Boris Johnson threatening to vote against it, and domestic politics at play in the UK. We'll see how that happens. But once that Northern Ireland Protocol really comes into play and freer trade, obviously not free trade, but freer trade with rests, bottlenecks, and hassles begins in UK, there is very likely to be appreciation of the pound sterling. And therefore, if you hold that view, then it's probably a good time to enter and buy some pounds and keep it for yourself. And who knows, in maybe 6 months to a year from now, you could see the pound at 0.9 uh, to it's at sorry, it'll strengthen, so it should go down to 0.8, 0.75, 0.7 to a dollar. So in terms of dollars, you could make more money, right? So again, so depending on, and if the protocol does not get the vote and it does not get implemented, then there could be a depreciation in the pound sterling against the dollar. So it's a sort of iffy situation. We'll have to see what happens. It's a event risk that we are talking about. And like with every event risk, there are event related opportunities for the astute and the experienced. One can always keep a tab on the news. One can also maybe put certain limit orders into your trading systems on the Forex levels for the pound. And as and when the news breaks, those triggers could be taken out, and you might have an entry. You will have an entry into the Forex trade, either long or short, depending on how you're positioned, right? So anybody who wants to discuss that further, well, do get in touch in person, and we'll be happy to discuss that. These webinars are mostly for educative purposes, and they're not meant as investment decisions. So GBP, EUR, and looking at the JPY, the Japanese yen, well, again, you can see that more or less just the same way as the DXY was doing. So in terms of the large global economies, apart from the British pound, really nothing much happening in the other major currencies. They're just tracking what the DXY is doing, right? Okay. Now, coming to the interesting mentions that we have been talking about in the previous Forex webinars, and one particularly, well, I would say, very satisfying and gratifying move that has happened this time is with some of the distressed currencies or the distressed economies of the world. We are talking about the Turkish Lira, we're talking about the Egyptian pound, we're talking about the Pakistan Rupee, and today we're going to also add the Sri Lankan Rupee, which we had mentioned in the previous webinars too. Now, basically the theme is this, that all these currencies have had a very, very rapid and a very, very sharp depreciation against the dollar for various local reasons. And I mean, those are multifactorial, but essentially whatever it is, all these countries are in some form or the other, one form or the other of an economic mess, right? Whether it is politically induced, whether it is induced by external debt, whether it is induced by improper, injudicious financial decisions by the central government, by the central banks of the country. That's really is a separate discussion, and there are different flavors of that. But essentially, all these four countries, that's Turkey, Egypt, Pakistan, and Sri Lanka, and of course, there are more, and maybe we'll expand the list in future webinars. There isn't much which is they all have one thing which is very common, which is that they are all under some sort of economic and political distress, right? Now, coming to the Turkish Lira, right? Of course, everybody knows that we've had the very unfortunate earthquake there. Now, something that I have been mentioning over the last many weeks on the Turkish Lira, well, it's now beginning to really pan out, but just a hint. It's not really a full-blown move yet. That is definitely yet to happen, but there are hints that it could be happening. And what are we talking about? We are talking about the Turkish lira appreciating. So what we were saying is, buy these very, very depreciated currencies, and if solutions and resolutions happen in those countries as they happen, because they will happen. It's just a question of time. It's a question of when, and it's a question of being, tracking those events and time and appropriately positioning yourself to take advantage of the forex appreciation that is likely to happen in these currencies. So if you look at what happened in the Turkish lira, well, very, very, can you see this last candle? This is the daily candle that we are talking about. Let me just make it maybe a line chart. That's the blue line. And to make it even simpler, let me even, cut out these other lines. And yeah, right. So you can see that this is very much going up. It's still depreciating against the US dollar, but there are these moves that it is making towards the downside. So these moves are not yet completely, they haven't really changed the direction of the trajectory, but there is what we call this upper yellow line that I just extended, what we call a bearish divergence that has happened in this chart, and that was on the weekly chart that we're talking about. So there is a hint that as this starts to go lower, and I think one point to look out for is this level, which is 18.7. It is right now at 18.8, right? It was 18.9. Now, these may sound very small, and they are, you could say, smaller moves, but this is how the small moves will eventually add up. And as and when this breaks this 18.7 level, there could be an accelerating move of the Turkish lira appreciating against the US dollar. One major event to look out for in Turkey is the upcoming elections, I think in 2 months, and whether the current ruling party, headed by Erdogan for almost 20 years, he's been the president, retains the their power or not. There are more and more questions being raised on that. And like I said, there are views that if Erdogan loses and we have basically fresh outlook, fresh blood coming in, then there could be a very rapid recovery of the currency's strength, of course, aided by more conservative and conventional financial and monetary policies by the central bank and the central government. So that's the event to watch out for, in my view. And I think the market has got a hint, because you can look at this. Let me take the okay, just take the daily chart itself. You can see, after very rapid moves that happened over last year, really depreciating from, 13.5 to 14 to 15 to 17 to 18. You're basically seeing this go flat for the last 6 months, right? So really not much of a move. And this upward acceleration has drastically diminished. These are the first signs that something is stabilizing, let's put it that way, in the currency markets for the Turkish lira. And if that stability strengthens, then the Turkish lira could really get much stronger in the weeks ahead. So for those of us who are um, having that view and it's grounded based on events at the ground level in Turkey, especially the political side, then this is an opportunity that one can definitely look at. And that opportunity is what? Basically, like I've mentioned before, buy the Turkish lira and hold on to it for the next many weeks and months. And you could easily be sitting on 15, 20, 30% appreciation against the dollar, right? Next, Egyptian pound. Well, look at this. This is I did a whole webinar on this or a whole discussion that we had. Really unfortunate about how things are happening out there in Egypt, right? By the way, all these countries have huge, massive, 20, 30, 40, 50, 70% inflation rates. It's just horrendous what the local people have to go through. And usually of no fault of the citizens themselves. It's all decisions that are made by the powers that be at any time. What you're seeing on the screen, just, I mean, if you can ignore all these things, but if you want to read it, you're most welcome. Was part of a webinar that I did to ask and get people to appreciate, how life can very drastically and negatively change for people when the currencies of their country just collapse quite literally on an overnight basis. And then what do you do? And we also discussed how, if you were in a situation like that, you could have at least taken care of your own personal financial interest by taking certain steps to protect against the inflationary and the inflation caused by the depreciating currency, by whether it's buying gold or converting that money into dollars, and how one could do that, etc., and all that, right? Okay. Anyhow, the point is that the Egyptian pound seems to show no strength at all. It is, as a matter of fact, depreciating even further. It's quite unfortunate, for example, that Egypt is building an entire new city, a new Cairo, billions of pounds, Egyptian pounds, dollars being invested into that. But whether the real economic, real issues that affect the millions of people there are being handled or addressed in a proactive manner is open to debate. And there's a lot of um, consensus that that's really not happening. So the Egyptian pound likely to depreciate further. And well, if you had that, you'd probably want to move your money into dollars if you haven't already. Already very, very late, but still, right? But then it's a matter of time that something will turn around. And these can be multi-month, multi-year setups. You just have to be patient and waiting and tracking. And when the setup comes, trust me, you're going to see it very quickly in a few minutes, how quickly it can change and how quickly fortunes can be reversed for people and for those who made those decisions, right? Right. So moving on to the next currency, all in the Indian subcontinent, and which is the Pakistan Rupee. So as you know, Pakistan really in the doldrums. It's a complete mess out there. Now there's no money for the Pakistani army. Also, the soldiers are not getting paid. There is no food there's no money to feed them enough food, all sorts of stuff happening. So that really sets up a very interesting dynamic as to what could happen next in the political and the army and the social fabric of that country. It's really, really a very, very tricky and a very, very unfortunate situation, which, like we've been saying before, it's been building up for a long period of time. It's not something which happened really overnight, though it looks like that. And things are just getting back to us. So in this time when you're talking about, the entire Feb, basically, there were more and more talks between the Pakistani government and the IMF for a bailout loan. But you had all these noises and voices saying that, Pakistani government saying that we are not beggars and we cannot accept such draconian conditions and blah, 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 blah. But, one thing is posturing and grandstanding for the public consumption versus the reality, which, the people who are in power and in the know. So there's only so much, hot air and noise one can make till it catches up with reality, and then one has to face the reality. Well, looks like obviously the IMF said, okay, fine, you guys don't want, fine, don't want. We can't give you the money till you meet certain conditions. Like they say, quite, that's the truism of life, isn't it? Beggars can't be choosers. And suddenly you had this overnight, one day move from 260 Pakistani rupees to a dollar to 280 Pakistani rupees to a dollar, just happened in a 1 day move, right? Now, having said that, the talks are still going on between the IMF and Pakistan. So at some point, something will give, and what will give, if you take history into account, is that the Pakistani government will really have no choice but to accept the IMF conditions. However much you dislike it, you don't have any option left. And when that happens, that's the event that we're talking about, that we have been mentioning, that the appreciation will happen in the Pakistani rupee. And to prove our point on that, and to prove that it works, and to prove that, how much opportunity and money can be made, well, let's look at the Sri Lankan rupee. And this is a, real lesson to be taken home, which is basically, that this is what can happen literally in a few days when the mood completely swings. So I'm just making it as simple as I can. The green line right on top is the maximum rate at which the Sri Lankan rupee was or has been since, let's say, May 22, right? So it's almost a year, a little less than that. So between 360 to 370, 360 to 370, it's been going. So again, as I was saying in the earlier ones, you're looking at the Turkish Lira, look at the chart, go back, you had this sharp moves, and then you just have this going flat, right? So literally in a few days, the Sri Lankan rupee went from 200 to a dollar to 368 to a dollar, stayed there for almost a good 10 months to 11 months. And then what happened? Look at this. This is a tremendous move from 360 rupees to a US dollar to 334 rupees to a US dollar, an 8% appreciation, which happened from 22nd Feb to today, right? So that's literally within a week, you have a 8% move on a currency, right? This is tremendous. Now, if you were holding Sri Lankan rupees, that means you made 8% on your dollar purchases, or your dollar value that you, if you convert it back to dollars, you get 8% more dollars, right? And the reason behind that, behind this move is this, right? So Sri Lanka, the government and the Central Bank of Sri Lanka basically agreed to do what is required or necessary or forced upon, depending on your point of view, to do what they have to do on their end to accept the IMF bailout conditions. And what basically they did is increased the bank rate in Sri Lanka, and they said that the Sri Lankan rupee will be fully market driven from next week. This is, remember, March 3rd is the news. We are doing this on March 4th. So this literally happened. The announcement came 2 days back, but you can see that the currency had moved already 3-4 days before that. People in the know that this has already happened. It's a done deal. And those in the know, whether it's the banks or the rich and powerful or whatever, would have already gone in and said, look, let's do this. And the demand supply situation for the commodity or the item, and in this case, this is the Sri Lankan rupee, suddenly increases and the price went from 360 to 334. 2030, right? So the country is going to get a 2.9 billion IMF bailout to steady its economy, right? What did the Sri Lankan Central Bank do? It increased the bank rate. That's like the RBI increasing the rate, right? By 1 whole percent. So 1% is 100 basis points to 16.5. And they just did that. And this is the highest rate it has ever been since August 2001. Okay, 2001. So it's in 22 years, this is the highest rate that the Sri Lanka Central Bank has imposed, right? Now, very interesting point here. Similarly situated Pakistan on Thursday jacked up borrowing cost by 3% on all loans that were there in the system. So Pakistan is also taking steps, however unpopular and however disruptive they are in the short term, to basically make the Pakistani economy stabilize at some point. And when this takes on the next level and things move in, that IMF bailout that basically the Sri Lanka won, Pakistan will also win, right? So Pakistan has increased taxes and cut energy subsidies, etc. Same thing Pakistan has done. They increased fuel cost, they increased electricity cost. They added 3 rupees 25 paisa to per unit of electricity just last week, right? And they have been able to do some things to reduce inflation, right? So the inflation has come off in Sri Lanka from a peak of 70%, right? I'm not going to go into all the details, right? But there it is. If you want, you can go to the Bloomberg article and really check out what the details have been. So you're seeing that things are actually, moving in that direction. Now, here's something I want to interestingly point out. This economist basically says the Central Bank of Sri Lanka's surprise decision to hike rates in its March meeting reflects a necessity of fulfilling IMF demands in order to receive aid from the organization, right? He's saying the rate hike, however, may do more harm than good for the economy. Well, okay, these are all opinions, what is good or what is bad and all that. But here's the thing. The contention that I have is that this surprise decision, you know what? The more you study economics, the more you study markets, the more you get the sense of what the moving parts are. These are not surprises. These are like going to happen. It's just the surprise is when it happens almost always, right? It usually tends to happen when you don't expect it to happen, but you know it's going to happen, right? Like, somebody who is like, say driving rashly, there's going to be an accident at some point. It may not happen right now. It may not happen tomorrow, but you know that this rash driver is going to have an accident, maybe, but you can't predict when. So that's the nature of things, right? And as you get a keener insight into those things, you are able to get better at saying, you know what, probably not this week, probably 2 months from now. And there'll be some reason for 2 months from now. There'll be some event. And, there are economic calendars available. There are political calendars available. It could be an election. It could be a Fed decision. It could be some global event or something. The more you track all this geopolitics and current affairs, you will get a better handle on this, right? So coming back to the chart. So like we've been saying, if anybody had converted their currency, whatever their currency was, right, whether you're holding the Indian rupee or the British pound or the euro or the yen or the um, US dollar at say 360 rupees for a dollar, you bought for $1, you bought uh, Sri Lankan rupees, you got 360. Now you're going to get 330. You convert it back, you'll get 101.08 or $108. Now this appreciation is not over. Can you imagine if 330 goes to 300 or 250 or something, then how much money there is to be made in dollar terms, right? So this is the thing to watch out for. So if you go to, let's say, even to 250, right? Okay, even let's just take it at 300. You're making 17%, right? If the Sri Lankan rupee goes to 250, you're going to make 30%, right? And if Sri Lankan rupee strengthens and strengthens and strengthens, and let's say it goes to 200, you could make 40% on your dollar holdings, right? I mean, let it take a year for this to happen. Let it take even 2 years for this to happen. But that's a fantastic turnaround that is in the works that is going on, right? So this is the, I think, take home lesson for today, for this webinar, that these are the sort of opportunities that the Forex market presents itself. This was supposed to be actually a short webinar. I wanted to keep it under 15-20 minutes just to do very quick review. But then the Sri Lankan thing happened, and I just wanted to reiterate this and demonstrate this practically, because those are the sort of opportunities that you're looking on as far as the Turkish Lira is concerned, may and in some future the Egyptian pound, even the Pakistani rupee. Things can look interminable, but there is always a point where things do turn around. It's a question of just being patient and waiting and waiting and waiting. Like you saw in the Sri Lankan case, that waiting was almost 10 months, right? And that's where the charts are really, really beautiful, right? You don't have to, really track it. You can, if you are really, astute, you can basically go and do proper chart analysis, put levels, put alerts in your system, and when that triggers, get notified, right? And as and when that trigger happens, go review, and if there's a opportunity there, enter that opportunity. If it's like you think, maybe you need to watch for more, then watch for more, right? So really, without gluing yourself to the screen, these are the sort of opportunities that one can do just by reviewing charts systematically, say maybe just once a month or once a quarter, or at least maybe once a week, and look for what is possible. Of course, you have to figure out the actual transactional dynamics of it. How will you get the Sri Lankan rupee? How will you get the Turkish lira? How will you get it? Where is it possible? Where is it not possible? It should all depend on your location, which part of the world you are in. Can you do it through an exchange? Can you do it online? Or will you have to do it in physical currency, or whatever the case might be, right? So I hope that, really this was the take home message. And finally, before we close, looking at the Indian rupee, right? So the Indian rupee has appreciated from 82.50 to 81.60. That's really a nice one as far as the Indian rupee is concerned. However, we are definitely not out of the woods. Like I said in the previous webinars, we could come back to even 80 rupees to a dollar. We had gone to a high of about 83.25. So 80 to 83, 80 to 83 is the range to look out for. And only once it breaks those levels are we going to have a more decisive move. And like I mentioned in the previous webinars also, right, that while the rupee while the dollar, sort of appreciated, and the rupee would have the global currency is also basically moved in the similar direction. The Indian rupee had not moved, right? Now the Indian rupee has appreciated without the dollar actually moving. If you remember, the DXY has really not done anything, right? Putting the DXY, this is the time we are talking about, right? So the DXY has not really moved, but the Indian rupee has definitely moved. So something local at play going on, but it is range bound for now. It'll be interesting to see what happens. So if you are somebody looking to buy dollars, right, probably a good time to wait and see whether if it comes to 81 or maybe even 80.50. And if you are, and then take a decision, right, on what you want to do, right? So great. With that, I hope this was an informative and insightful webinar. The take-home message, again, just to close again and reiterate, was this dramatic move in the Sri Lankan rupee, and pointed out similar opportunities. Again, even now, even the Sri Lankan rupee, but they will appear in the Turkish lira, in the Egyptian pound, and in the Pakistani rupee. And we will add other currencies to the mix, to the webinar in the future, as and when we find such opportunities. If you'd like to get updates and receive or know about the other webinars that we do them on a whole set of asset classes, the US markets, the India markets, the Gulf markets, and if there are any specific interesting finds, we will talk about that. Of course, on the bullion and energy and agri and industrials globally, right? We have various webinars that happen through the week. If you would like to get updates, two things. One is get in touch on the number on your screen and let us know that you're interested. And two, well, you have our YouTube channel where you're probably viewing this on. Subscribe and stay in touch. Thank you very much, and looking forward to your feedback and wishing you a profitable week ahead. Thank you and goodbye.